faces. Love to see familiar names, at least, even if they're not faces. Thanks for joining us. All right, let me go ahead and start. So I'm Catalina Kairawongs. I'm the founder of LoanSense here, and I wanted to give this really informational and jam-packed webinar because there's been a ton of federal updates, as well as we want to translate it into what it means practically for your student loan payback strategy, as well as what are the implications on your financial goals and plans. And I, of course, would love to introduce you to James, who is here as well.
Hi, everybody. My name is James. Yeah, I'm a lead advisor here at LoanSense, and I'll be serving as a moderator and moderating the chat for the Q&A session at the end. So feel free to submit any questions you have along the way. And thank you for joining.
Yep, and he'll catch me if I miss any info on the Q&A that he knows better. So if it's not going to quite last 55 minutes, I promise you it'll be really good. I put a review when COVID first started. I did my first webinar and I got this review. A friend of mine watched the webinar last week and told me it was the clearest, most informational webinar I've ever watched. So I don't mean to overpromise, or I'm hoping to over-deliver here, but I just want to say that if you stay with me, I'm hoping that I can serve you in the value of this information, and that I promise is my only objective of this call, of this presentation. So we're going to talk today really briefly. There's a poll, like I mentioned, for housekeeping items for those entering. Thank you so much for joining us. I'm super excited to be here, give a brief update, talk about strategy a little, and talking about how your strategy connects to the next stages of wealth building, whether it's buying a home, whatever your plans are. There's a poll and, of course, Q&A. So please answer the poll and ask your questions along the way so we can get to it. I'm going to first start with, as I say here, who am I and why am I here speaking to you today, and how does my knowledge possibly contribute to helping you all make better student loan decisions? So I am your presenter. I came to the US at the age of 11 from Thailand. The Southeast Asian crisis brought me from Thailand with my mother and two younger sisters. And my mother always said to us, you know, the two things you need in life is you need a good education and you need to save your money. Those were like gigantic values for us. And education was really, really important. So, like every good student, I went off and got an education. I did take out student loan debt. What ended up happening was I didn't really understand the full implication of my repayment and how repayment would affect me ultimately later down the line, like buying a house and other decisions I made in my late 20s. But my desire to help people on the education front is what brought me to doing higher education access work with first generation students and understanding how to finance college. And I grew a college access program from 12 to almost 2,000 students and helped get students a lot of Pell Grant funding, as well as those who didn't go to traditional four-year, how to get high skilled jobs. And you know, that plan got me to a Bill and Melinda Gates Fellowship, where I went to Capitol Hill and worked on the Student Succeeds Act, but also higher education finance. And I saw how broken our student loan system was and how few answers borrowers got, whether at the point of borrowing in college all the way to when they're graduating, what are the best options? And then lastly, what are the implications to my student loan payback decisions, to big goals you might have, like buying a home, saving for retirement? And I saw the gap in the marketplace as well as the government, in that even financial advisors didn't have the answers when it comes to student loans because it's highly regulated. So I founded LoanSense to fill in those answers for borrowers and want to bring along my colleagues in financial services, whether you're a financial advisor, a lender, or even a consumer fintech app. We want to provide consumers with the best, borrowers with the best answers they need to make those next step decisions. And so that fuels my desire to help borrowers. And although I partner with a lot of partners, people in financial services, I just want to say that LoanSense is all about the best outcome for student loan borrowers, and that is our 100% commitment. Okay, so we always like to connect student loans to short-term goals. So like I already mentioned the poll, but if you could quickly hit what your short-term goals are, you can hit multiple goals. I also wanted to mention that we have lender partners we work with. So if you come into the app and you don't have a lender, we have lender partners we work with that we also train on the student loan impacts to the debt to income and home buying. So I just want to mention that super quickly. So now I'm going to go into updates on this whole payment pause and what's going on and how this payment pause is actually really vital towards student loan forgiveness. And I know there's been a lot of back and forth with the Biden administration. Is he going to forgive student loans? Is he not going to forgive student loans? As of today, he has not come up with any mass forgiveness, but he has hugely funded existing programs like temporary expanded public service loan forgiveness. If you've been disabled or you've been defrauded by a for-profit college, he has funded those programs extremely robustly. And we have helped borrowers access those funds already. And so before I go into that, I just want to define what loan forgiveness means, because everybody thinks, oh, you have to be a teacher or a nurse to get loan forgiveness. But loan forgiveness is available to every single person with federal student loans who can get their student loan balance forgiven after a specific number of payments that they have made based on their income. So any remaining balance after you've made a specific number of payments, and the reason I can't give you the number is because there's multiple factors that go into your length of payback, you will get your loans forgiven if you file the right paperwork and on time, okay? And that's what LoanSense helps consumers with, is figuring out what paperwork to file, what program's best, what decisions do I make to stay in optimal standing so you can potentially get loan forgiveness if that is your decision to do. So really quick update on this CARES Act and how you should think about decisions you should be making soon in November. I would encourage October, November to start thinking about it and not to wait until December, January, because the student loan borrowers are just going to be inundated. On top of it, a few of the largest student loan borrowers like Fed Loans, which manages loan forgiveness, is going to be transferring over 10 million borrowers to another servicer. So there's going to be a ton of chaos. So we recommend anybody with Fed Loans to save their information and to really make sure you have all the information on your Fed Loan dashboard saved. So when that transfer happens, you're prepared. But meanwhile, this pause has obviously meant $0 payments and zero interest, right? It means also what's really valuable to know is these $0 payments count towards loan forgiveness, loan rehabilitation, as well as temporary expanded public service loan forgiveness. So it counts for every form of forgiveness depending on what program. It doesn't depend on what program. It counts. These $0 payments count. Extra payments you're making right now don't actually count towards more forgiveness. So for example, if you're like, oh, I want to pay it to pay down my loans, making that extra payment doesn't actually count towards, it doesn't make you that payment count versus this. If you don't make the payment, it's going to count. Basically, whether you make the payment or not, this month can count for loan forgiveness if you filed your paperwork for the program. And the reason why putting on this informational webinar is so important, and please ask us clarifying questions if you don't understand this point I'm going to make now, is if you're on the trajectory to get loan forgiveness, whether it's public service loan forgiveness or just regular loan forgiveness, filing your paperwork now is as soon as possible is urgent, because you want more months of $0 payments to count towards loan forgiveness. So let's say you have a $500 payment. If you get 6 payments counted towards loan forgiveness, that's $3,000 that you will never have to pay back. But if you don't file into these programs now, these 18 months are just going to be tacked to the end of your loan term. So it's really important that you understand your strategy and file sooner rather than waiting for January to rear its ugly head once we have to start paying again. So I hope that was clear. If it wasn't, please ask me questions because it's a super important detail. Now I'm going to go into a little, I always do a quick refresher because it's highly valuable to a lot of people. You might ask yourself, should I be paying more each month when I get kicked back into repayment, Or should I be trying to get loan forgiveness? How do I know that answer? And so I like to cover this because it's a very important part of understanding what your payback strategy is going to be. Okay. So, really, really quickly, there's two ways to pay off your loans, right? One is pay super quickly, like your hair's on fire. Like, I'm just going to go all at it. I'm not going to do anything. I'm going to eat ramen noodles. I'm going to live in the crappiest apartment in a dangerous area because all I'm going to do is pay my student loans, right? That's one technique. Nothing wrong with that technique, but it's not a technique that most people opt for. It involves a ton of discipline and also a very financially secure position as well with your job. A lot of people think about how do I pay as little as possible over a certain number of payments and then possibly qualify for forgiveness, right? And so you need to ask yourself, what is the best route for you? So I like to come up with what's called rule of thumb to help borrowers think about this. And the rule of thumb comes you should think about paying your student loans quickly if you have a really stable, high earning job relative to your income. So you could have a really high paying job. I'm sorry, high paying job relative to your debt. I said that backwards. So let's say you could be a doctor even making 200,000, but if you have half a million in student debt, then you don't make that much money relative to how much debt you have. So pay quickly is for the rule of thumb for people with stable private sector jobs who have less debt than their income. So if you make 100,000 and you have $100,000 of debt and you're like, I want to eat ramen noodles, I want to pay it quickly, fine. You know it's stable, it's in the private sector, fine, that's great. But let's say you don't have that. You have more debt than your annual income, right? Or you work for nonprofit or government, or you have significantly more debt than your income, even if you work in the private sector. Those are not conditions in which accelerating payoff may be possible in terms of getting rid of your debt as soon as possible, right? So you may be a really great candidate for pay less each month and qualify for forgiveness. So now here's the strategy and actions you should take when January comes around. How do you think about this, right? If you're on pay quickly, you can still there's nothing wrong with stopping to make payments. In fact, there's data that came out that only 1% of student loan borrowers right now are actively making payments. So most people have stopped making payments during this payment freeze. But what you can do if you have a stable job making good money is to save your funds. And then I said September here. I'm sorry. I should have updated this presentation because now it's January. This presentation was before the payment pause got extended again until January. But you can always make a lump sum payment if you decide pay quickly is your strategy in the middle of January, right? If you're disciplined enough to save the money, wait till the middle of January, you can make that payment, right? Meanwhile, you could use this 0% interest time to save up for your safety net, your emergency savings, and that's what we'd recommend. If your strategy is pay less, then now is very vital that you file into the appropriate program so you can get the next 6 months or so counted towards loan forgiveness. That means the income driven repayment paperwork. It also means if you work for nonprofit or government, it means your public service loan forgiveness paperwork. If you have paid for well over 10 years, because some people are like, oh my God, I've been paying for well over 10 years. Like, why isn't my student loans forgiven yet? Or why isn't, like, I've worked for government, nonprofit, like, why am I still paying? I've been paying for 12 years. I mean, that is a sign you need help. There's something going wrong with what payments are counting that you may need help. And we have a track record of helping people get years of payments counted. Let's say you have made mistakes in the past and now you qualify and on track for forgiveness. Well, that's also a great trigger point because we can figure out how potentially those payments can qualify for temporary expanded forgiveness where you can get those payments that didn't count counted, right? So there's all kinds of circumstances with the new increase of funds that Biden has put into temporary expanded public service loan forgiveness that you may qualify more of your payments towards loan forgiveness, okay? So I just want to put it out there. So if you are on the pay less track, like I said, don't make the payments, they count towards forgiveness. Just file your paperwork appropriately now, and these $0 payments will count towards forgiveness. If you filed nothing and said, I'm going to wait till January, well, then guess what? You're probably not getting these $0 payments counted towards loan forgiveness. Okay. So filing into this ASAP is really vital. At the end, I'm going to tell you how LoanSense can assist you in that process. Okay. So there's key mistakes people make in trying to deal with their student loans. And I just want to say, we're here for you. We empathize with you. It's super confusing. It's not very understandable. And oftentimes when you call your student loan servicer, it's not very clear what you should be doing. So I want to empathize with you. There's 13 million people eligible for some form of income-driven plan and loan forgiveness, but are not filed into the program. So 13 million people, that's not a small amount of people. That's literally almost a third of all student loan borrowers, right? And the people that do file, 71% are committing some type of errors in the process that has made Congress have to pass additional laws to help people. So we can help you qualify under those new laws so that you can qualify more payments and get loan forgiveness quicker. Okay. So just know if you feel confused or you're like, I'm not quite sure, do I qualify? What have I done right? What have I done wrong? We can alleviate all those questions. So the most important part of the webinar has come about now. So I'm going to take a pause to let you type in, I know you can't unmute yourself for this webinar, to type any questions you may have about this part of what our recommendation is. Also, I'm going to pause real quick for like 30 seconds for you to categorize yourself, or if you have clients, to categorize your clients. Where do you think your clients or yourself belong in this bucket? Do you or your clients belong in pay quickly or pay less bucket? That's really important because it affects how we think about our student loans and next steps, okay? Do, 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 do. Uncomfortable by silence. Anyways, I hope you thought a little bit about what bucket you or your client fall into. So now let's talk about the implications, because how you categorize and put yourself into a bucket really matters in terms of the benefits of enrolling into an income-driven plan, regardless of whether you work for a nonprofit or not. Like I said, you don't have to work for a nonprofit to get loan forgiveness through just a regular income-driven plan, okay? So the benefits, you improve your eligibility to qualify for a home and increase how much home you qualify for, okay? That's first and foremost a gigantic benefit. On average, LoanSense helps people that want to buy a home qualify for an additional $98,000 of home. Okay, so that's a huge benefit to enrolling properly in these programs. Okay, because when I was enrolling into my student loan plan, I had no idea that 5 years later I would be denied a house, my first house, because of issues around my debt and various other issues. That doesn't have to be you, right? If you've been turned down or have issues, if that's your goal, we most likely can help you figure that out, even if you're a parent with what's called Parent Plus loans and you took out loans for your children, okay? The second thing, if you're getting married, your payment plan choice determines if your spouse's income will also count towards how much you have to pay. Okay? That's huge. So if you're going to get married, you have children, all having children, dependents, and marriage impact what the amount of student loan payment you will have to pay each month. So it's really important to understand what plan you should get on, as well as your tax filing status. And our service can help you determine both of those items so you can optimize what your payback amount can be so that you can qualify for more home. You can save more for whatever your financial goals are, okay? That's point number 2. Point number 3, you can strategically choose your proof of income to submit to lower your payments and save for other financial goals. Okay, that's also part of our service when we assist you in enrolling. You don't have to use your pay stub from this last 2 weeks if you earn more money now than you did in 2020, right? So there's all types of things we can do to help you figure out what proof of income to optimize your payback amount so that you can successfully figure out whatever your next step financial goal is. Okay, let me see how you all answer the poll. Wow, lots of people want to buy a house, lots of people want to pay off debt, and lots of people want to save for long term. So this is really optimal then. I'm seeing the poll right now. If you haven't answered the poll, please answer it. Oh my God, it's skipping ahead. I didn't mean to. It's way skipping ahead. Oh man, I'm sorry, y'all. I ended up looking at the poll and just started skipping ahead. So basically, buying a home is really important. So understanding getting married and how your marriage impacts your debt to income. I'm going to have a case study coming up so you can see the huge impact on that. But getting a session to understand what loan decisions you're making now, how it can impact your home buying is just gigantic. Then, of course, obviously, the month over month payment amount impacts how much you can save each month or how much other debt you can pay down, right? So, literally, by getting on the right track for loan forgiveness, you can use your monthly the difference between what your payment was before to what your payment is now. And the difference, you could use that to pay off higher interest debt that can't be forgiven, right? So, that's how it also fuels greater savings. Additionally, you let the student loan program act as a form of insurance if you lose your job. If you lose your job or you're between jobs, you can qualify for $0 payments and greater amount of forgiveness. Okay. So even if you're between jobs for 2 weeks, you can file and get a $0 payment and literally get $0 counted towards your debt to income if you try to go buy a house. Okay. That can be utilized. So just keep that in mind. That's a huge pro tip we recommend to people. And then lastly, if you save for your employer-based retirement savings, if your employer happens to have that, then what that does is it lowers what's equivalent of your income that calculates your payment. So you'll save more for retirement, have a lower income, and then your student loan payment will also be lower. So you're effectively using a federal government student loan payment program to fuel your retirement savings. We highly recommend that for people who are behind in retirement savings in their mid to late 30s. So please keep that in mind that these are pro tips and techniques that our advisors lean on to really help student loan borrowers not let student debt hold them back from building wealth and growing their assets, okay? We really want that for you, is to figure out how to move from debt to wealth. I cracked that code when I got my first house, then my second, then my third, right? And I was able to crack that code and figure out how my student loan payments play into my debt to income and figure out how do I prioritize debt payoff and optimize my financial situation so that I don't have to feel a crushing burden of my student loan debt. So I practice everything I'm preaching. I don't say it's for others. Okay, so I'm going to go to the 3 tips and I'm going to go to the case study, then open it up to Q&A. Okay, so know your repayment strategy. Okay, simply, will you pay less or will you pay more? Okay, because if you're going to pay quickly, there's also refinancing strategies. But that's if you can pay your student loans, I would recommend under 5 years. Okay, because there are some dangers to privatizing your student loans. Like you can never get it purged. No matter what, there's a lot of protections you lose, right? So just know what your payoff strategy is. Is it to pay like your hair's on fire, like pay it off as quickly as possible? Or is it to figure out how to get reasonable payments and plan for your future financial goals, right? It's not only to pay less forever, but it's to pay a reasonable amount and optimize your financial goals. Second, have your payments counted for loan forgiveness. If you decide to pay less, how do you get your payments counted, right? And if you decide that's the route, that you're making sure you're filing your paperwork on time and you are making your payments on time. You do not want to pay your student loan payments late, because what happens is if you, let's say, originated 20 student loans during undergrad and grad school, for example, and you make one late payment, it looks like you made 20 late payments. So you really need to understand when your paperwork is due, when are your payments due, and to make your payments and paperwork in a timely manner, because there can be a lot of negative repercussions. For example, when you file your paperwork late, all that interest that was on its way to getting forgiven will now be added on top of your principal. So now instead of owing $50,000, for example, and let's say 20,000 capitalized, which means now you owe 70,000. So you really don't want 70,000 of principal where the interest is counting on 70 and not on 50. So you really don't want that to happen. So filing and paying on time is so vital for your financial future, no matter what. And if you can't afford the payment, reach out to us because that's how we can help. So now here's a case study of individuals we have helped. Here's Maya. She filed on her own and got her paperwork rejected, kept on getting letters back, and couldn't get her payments to actually qualify towards loan forgiveness. LoanSense helped her file her paperwork for her prior employers and get $20,000 worth of payments counted towards loan forgiveness, almost 3 years worth of loan payments. Okay, so that was obviously very helpful to her. Here's Tiffany and Richard, who are married, and they didn't understand that how each other's income counted towards each other's student loan payments. And they had over $2,000 of student loan payments combined. And because we understood the payment plan to not count the other spouse's income, we were able to help them get their payments down to under 500. And they wrote this email. Hey, we were denied for mortgage 3 times before until LoanSense helped us lower our combined student loan payment from over 2,000 to under 500. We have 3 kids and finally feel the joy of providing them the security we always wanted for them. So that's another case study. Then I'm just going to shoot a few here. Like what Megan said, there's a lot of borrowers who oftentimes lenders or financial professionals will say, well, you just need to enroll in IBR, what's called income-based repayment. Well, guess what? IBR is one program. There's many programs. So we can lower your debt to income or lower your payment just by enrolling you into a better program. Then there's borrowers like Alex who just didn't refile their paperwork on time and got $40,000 of interest that was added to their principal, like I mentioned. And here's another example of a borrower who qualified for discharge and loan forgiveness, discharge through a loan forgiveness program and needed help applying for the paperwork. So here's examples. And here's one that came in super recently, August 4th of 2021. Amazing news. I received complete student loan forgiveness under the temporary expanded public service loan forgiveness program. I honestly can't believe it. I'm still in shock that nearly 170,000, you see the balance here, almost 170,000 went to zero. Is no longer a debt I owe. Thank you so much to you and the entire LoanSense team. I would never have been able to do this without your guidance and help. Thank you, thank you, thank you. So you never know what programs you qualify for. If you've been paying for years and years and years and you're wondering what is happening with this balance, when am I going to get it forgiven? This person that got their loans forgiven wasn't even enrolled in the right program, and we were able to get their loans forgiven because of these expanded forgiveness programs that Biden has refunded. So you'd never know, right? Especially if you have a disability. Or even if you don't and you've just been enrolling in the wrong program, you may be a great candidate for temporary expanded public service loan forgiveness or expanded relief. So now I'm ending. I have 1 minute. I said I'd try to keep it to under 30 because I want to make sure there's time for Q&A. I just want to talk real quick now. James, if you don't mind chatting our special right here. What this special is, I know there's quite a few people that are joining that have already bought our service. So you can, you don't, obviously you've already got to experience our service. So this isn't necessarily for you, but please stay for the Q&A because this will only take a few minutes. Until Friday, we're giving a promotional deal to those who really just have been following us, have been on the fence, want to explore. Obviously, you know right away that you can get completely free analysis. By the way, spread the word, completely for free. Answer 5 questions, upload your student loans. Literally, no cost, get your information for free. Like, that's free. No, that's always been free, please. Then, of course, there's also if you need to speak to someone, to walk through the outputs, to answer questions like, what should my home buying plan be? how should I think about the impacts on my retirement savings? Like all these things, although we don't advise on retirement, we're not financial advisors, we can answer what are the implications to future goals and plans. Our usual service is usually 197 and 3 payments of 97. Today, we're going to discount off a payment, which is about 20%, using this discount code. So if you've already bought, this isn't for you. However, if you want to spread the word, if you know people who can be helped by this, we will be giving this discount until Friday, midnight Eastern Standard Time. We welcome you to of course, enroll. So really quickly, this is what I wanted to show you. I didn't mean to click ahead. I need to move this bar because this bar is not allowing me. Basically, all I'm doing is once you click on the link for the webinar promotion, what it's going to do is you're going to sign in, and you can sign in with Google, literally just click a button. And what it's going to take you to is the payment page. When you enter your info, you're just going to go ahead and enter friend special, and that will give you access to the discount. I just wanted to quickly show it in case there was any confusion. Then what it's going to do is you're going to pay the 197 immediately, but then what it will let you do is this page will also detail everything you get. Plus, it will tell you what the process is. You pay, you book a time with your assigned advisor, you meet your advisor, and then we assist you enrolling all the relevant paperwork, whether it's for getting on an income-driven plan, for temporary expanded loan forgiveness, whether it's, dispute letters because you've made late payments, like whatever it is you need, we likely, 99% likely, have the paperwork figured out for you, and we'll assist in enrolling. In fact, you will enroll all your paperwork straight from our dashboard, okay? It's all secure. Everything's secure behind a encrypted login, okay? So of course, we stand by our results. We don't want you to buy our service if you can't benefit. That's why we want to give everybody a free plan, and that is our promise to you. You can't benefit, we give you your money back, or our loan advisor won't take an appointment if they don't think they can help. That's just an ethical, like if you have all private loans, for example, the minimal amount of help we could do is minimal. So I just want to say we're extremely ethical with what we charge people for. So here's my last note. You or your clients have worked really hard for your degree or their degree, right? And you shouldn't pay more than you have to. And if you're promised loan forgiveness and you're confused, it's a right that you should receive, right? We're here to back you and support you on this journey because we believe you deserve that support, right? They say 99% of people are getting rejected. The rates have gone down. It's closer to 90, but we know the track record we have, we can help borrowers achieve that. So the more money a borrower owes, the more costly their mistakes are going to be. So it's worth getting help if there's any confusion at all, and we'd love to be there. Our average savings is about $600 a month, and our projected forgiveness is about $78,000, okay? And we can help people for one payment of $197 and 2 payments of $97. So the payback is quite immense, and we're here to help everybody stay on top of their financial goals, whether it's buying a home, saving more, being able to actually retire with dignity. So I'm going to open up to Q&A. I'm going to leave this open. Here's the link. Please use discount code Friends Special. It ends Friday at midnight. We will send a recorded webinar. If you want to share it with anybody, please do. And of course, if you have been turned down for a mortgage, we have lender connections in which of lenders we actually train. Please don't let being turned down mean you're demoralized and it's a no forever. We can help you get a plan so you can, close on that dream home or whatever your next financial goal is. So awesome. That's all for me. I'm going to take live Q&A now. James, what questions do we have? Please chat them.
Perfect. We've got a few. And as we go, if you have any more questions, please feel free to continue asking along the way. The first one that we got in was from an anonymous attendee. But the question was, just to confirm, even as a new graduate, I should apply for a repayment plan and submit paperwork for PSLF as soon as possible so I can get $0 qualifying payments until January 2022.
The answer to that question depends if you're employed, who you're employed by, and if you're working or not. If you're not employed at all, and you know you're going to be employed by a public service entity, then yes, because you can get extended $0 payments for an entire year. So for recent grads, if you recently graduated and you don't have a job yet, or you haven't started it yet, or you're going to start it next week, it is optimal to apply now. Especially if you don't know what your payment strategy is going to be because you don't know what type of job you're going to get, it's optimal to apply now because why not get $0 of payments that can possibly count towards loan forgiveness if that's the route you're going to take. So that's what I would highly recommend. James, I don't know. Do you have anything to add to that? Do you think I missed any context in that question?
No, that's basically what I would have said as well, except if you are currently or already employed by a PSLF eligible employer, then there are the specific steps you have to take is that one, you have to get out of grace period, and then you have to get on the correct income-driven repayment plan. Because if you don't check off those two prerequisites, then even though you're working for an eligible employer, that PSLF counter won't technically begin.
Yes. Thank you for clarifying that. Yes. And then there's some additional paperwork to get out of grace period without going into too many details. It's more paperwork. But and let's say, for example, you're in grace period for another 5 months and you already are working for somebody that's counted, you may want to do that additional paperwork. But let's say you're only 1 month away from ending your grace period. It may not be worth it because by the time you file the paperwork and the servicer responds to your grace period has ended, right? So it also depends on where you are in your grace period. So I hope that was helpful. What else do we have, James?
So we have another very specific question here, which I won't name the participant, but the question is, I currently owe around $98,000 in student loans, and these payments resume early next year. There's also $12,000 in private loans that they're currently paying. Income is $125,000 a year plus an annual bonus of $15,000. And I don't think I'll qualify for any form of forgiveness because they work in the private sector as a recruiter for a software company. They're going to receive stock from their current company once they begin investing early next year. And the goal is to just pay off the debt as quickly as possible. And the question is, am I a candidate for a potential refinance? The current interest would be 6% on the $98,000 loan balance.
Okay.
If you wouldn't mind, I would like to kind of take this one because this is actually a previous client as well. I know who this is.
Oh, yeah. Okay, happy for you to take that. And we're hoping, by the way, answering this will be benefit to others that are here. Okay, so yeah, that's why we're going to answer this because we're hoping it will be benefit to others that are here. I just want to clarify that and not make it like a personal Q&A, of course. But yeah, go for it.
Sorry, yeah. Okay, so basically the bottom line question is yes, because you are in that plan, that bucket of I want to pay faster. Refinancing for a lower interest rate is a potential option, but you just need to remember that if you do refinance to a private loan, then you do lose all those federal protections that are guaranteed to you now. For example, this CARES Act forbearance, as well if there's any accrued interest on your loan balance, because if you were on an IDR plan previously, or just for any reason that there was any interest that was accruing on your loans, that's all going to capitalize. But also, because I know there's lots of people on the call who are looking for mortgages, if you switch to refinance that private loan, then you'll be switched out of your income-driven repayment plan, and your monthly payment will increase by a significant amount. So then your DTI will be negatively impacted when you're looking to close on a mortgage.
Yeah, thanks for that. Very thorough. So my strategy right away to people that are new in their jobs is federal loans give you insurance. that if something goes wrong, you can get a lower payment, right? Versus if you privatize your loans, sometimes you have to get a cosigner. There's risk involved if you can't make the payments, and the risk is lower if you stay in the federal program because even though the government will take you to collections and whatnot, there are still programs to lower your payment and get loans forgiven that you just won't get once you privatize your loan. So um, people that want to pay quicker but want the protections, we just say, hey, pay quicker, even if it's like 1 percentage point of interest higher. That 1 percentage point of higher interest is an insurance you're paying in case something goes wrong, you lose your job, you never know what can happen. Like some people, want to start families and they decide to take off 2 years or whatever to raise a family. Like that, you could get lower loan payments that you would therefore lose that opportunity when you privatize your student loans. And of course, the impact to debt to income. So yeah, thanks for answering that, James, as well.
Perfect. So the next question is, are there tax implications when these loans are forgiven?
Real quick, I just wanted to say before answering that next question, if that individual that asked that very specific questions has any additional follow-up, I wanted to just say, please reach out to us because we're happy to answer any other further questions or concerns. So is there any tax, now I'll answer, are there any tax implications when these loans are forgiven? I love that question. There are no tax implications if you are working for nonprofit or government. If you don't work for nonprofit or government, the Biden administration has removed any tax implications into 2025. So if you get your loans forgiven, but for 2025, there are no tax implications as written into law when Biden came into office. If you get loan forgiveness after 2025, because you're in the private sector and the time period to get loan forgiveness is longer, then what all the education policy experts are hoping is that Biden has created a precedent to not tax on loan forgiveness, which is what they're projecting to be the most likely scenario. And in fact, the Office of Budget Management has not written any plans on collecting on taxes from student loan borrowers. So I just want to say there's a high likelihood that people will not owe taxes even if they don't work for nonprofit or government. So I hope that answers the question.
Perfect. We have another question that says, would it be advisable to do both PSLF and the NHSC loan repayment program? What are the pros and cons of doing one or the other or both?
I'm not seeing this question and I'm a visual person. Can you just repeat what the program was again, James?
NHSC, that's the National Health Corps Service or Health Service.
Oh, okay. Yeah. Sorry. So the question was, do you want to answer this? I'm sorry. I'm trying to visually look for where the question is.
No, it's in the Q&A tab at the bottom.
Oh, okay. I'm sorry. Yeah. Do you want to take that? I see it now. I can take it, or you could take it as well.
No, feel free in time and after.
Okay, cool. So is it advisable to do both? What's the pros and cons of doing one or the other or both? Okay, thanks for asking this. So the National Health Corps program, yes, I'm familiar. Basically, if you can, what's valuable about it is you get forgiveness in a way shorter period of time. Depending on the specific area, there's like there's some breakdowns based on, I believe the state you're applying from, but my understanding is it's 2 to 3 years. So if you get a lump sum of loan forgiveness in 2 or 3 years, we highly advise to go about and do that. If you have a remaining balance, you should still continue to file into all the paperwork into your public service loan forgiveness program as well, because it's not exclusive. It's not like if you get one program, you can't get the other. Okay. So it's good to maintain the program for public service loan forgiveness as well. that would be my recommendation. But James, please add to that if I'm missing anything.
Sure. So just the quick pros and cons. For the health service core, the cons would be that one, there are limited funds for this program. So it's not like everybody that applies gets approved for it. So it's like something you have to apply for and then get approved, right? And then also, even if you get approved, it's up to $50,000 that you get granted towards your student loans. And so depending on what your debt level would be, it might not be sufficient to pursue just that National Health Core Service forgiveness, which is why if you do have a high debt level, it would be beneficial to pursue both public service loan forgiveness and the health core service forgiveness. But one thing that's very important to remember is that for public service loan forgiveness, you need to make sure that you're making your payments while you're on the correct plan and just what's due every month, right? And so if you get approved for that National Health Core Service, sorry, you get a lump sum at the beginning. And if you were to make that lump sum payment all at once, then what's going to happen is your account's going to go into what's called the paid ahead status. And so then that's going to interfere, if you will, with the way that your public service loan forgiveness program operates. And so the workaround for that would be to take that lump sum payment that's in your bank account and then continue on that IDR plan and just make the minimum payments using that $50,000 instead of applying that all at once.
Yes, I knew, because I remember discussing that in detail with you, and I totally, I'm really glad you brought up those nuances. So whomever asked this question, and you're a healthcare worker and you qualify for this lump sum forgiveness, I would say definitely get with James because you don't want to get in paid ahead status. It's a pain. If you get in paid ahead status for many, many months, then you're effectively not getting the payments you're making to qualify towards loan forgiveness. And if your employer is helping you make your student loan payments, it's very generous of them. This is like a form of employer forgiveness. But what they don't understand is sometimes the way they make the payments gets people in a bad standing where now the payments they're making don't actually qualify for forgiveness. So if your employer sponsors some type of student loan payment, or it's sponsored by a state program based on your employer, based on your employment type, like make sure to get advice on how to apply those payments because you don't want extra payments to actually hurt you. So I just wanted to add that to give context beyond even healthcare workers, right? Like teachers and various other professions have specific forgiveness programs.
All right. And I think the last question we have for now, but also if you do have last minute questions, please feel free to ask, was, hello, are counseling sessions available on the weekends? And the simple answer is yes, I am available on the weekends. On Saturdays, we're available. So, but also we're flexible. So if there's anything, just please reach out and then we can make something work. But
yeah, we try to accommodate. Yeah, we try to accommodate people's schedule. So yeah. I think there's one other anonymous question. Oh no, we already asked that. We already answered that. Okay. Cool. Are there any other last minute questions that are coming up? Anything? Thank you so much to those that joined us. Listen, don't do this alone. If you're confused, you're lost. If you think, oh my gosh, LoanSense service, I really need it. Whatever your thoughts are, but you're hesitant because of the amount of money, please know that, our number one priority is helping you. And we want to help you, and we will never, we won't want you to sign up for the service if we can't help you. So that's our number one priority. So the case studies you've seen, people leave with significantly greater savings than they've invested into our program. So we cannot wait to help you. And please let us know if there's anything. We will be sending out a recording of this webinar, and our special lasts until the end of this Friday. Thank you so much for joining. Thanks, James, as well, for your assistance and your detailed answers.
Thank you.
Alrighty, bye-bye.